Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over some Twitter information, stuff I threw together off Twitter, stuff that I'm seeing. Since the markets are down, we're not doing as much charting. So I'll throw a couple of these in, see what's going on with the Twitter realm. I've got a couple of these. They're kind of good. So let's dive in. It says Wall Street Silver. Remember in 2020, the media insisted that massive spending wouldn't cause inflation. The narratives, right? Here's why economists don't expect trillions of dollars in economic stimulus to create inflation. Well, I think it's coming from the housing market, a lot of it. That's the gateway for the money to get into the hands of people. And then printing on top of it is not helping on top of this. So it's definitely not helping their cause. Here's an excellent read. U.S. natural gas should be well supported between low U.S. thermal coal stocks and call on U.S. LNG, not to mention basin bottlenecks that will kick in by Q3 2022, setting up well for back end to rally. The back end, the Q3, Q4 2022, we're sizing up the Europe's natural gas crisis. The LNG market's yanking our market up for natural gas prices. We're at over $7 a million cubic feet. We're going to have really high heating bills this next winter. So it's going to be, I don't know. I'm not looking forward to it, to be honest. Looking here, inflation is running at 5.5% above target, and the ECB still plans on buying more assets over the coming months. Let that sink in. We've got Wall Street cheat sheet, the psychology of a market cycle. We've got contraction, expansion, and this is the market cycles. It's very well intertwined with the real estate cycle. But he's talking about the overall stock market, like the Dow Jones and tech stocks. And right now, where he thinks we're at is complacency. So I'm a genius, euphoria, Kathy Wood style up there. We're all going to be rich. That's right here. And then we're starting to come down. And I think that's where we're at, is the complacency. We just need to cool off for the next rally. And then we'll do this type of move. The anxiety, denial, panic, and capitulation bottom. And then the capitulation bottom, they always have these like little humps. I see that all the time. Then you get this V-shaped move here. And then, yeah, you've got the suckers rally. That's when I'm buying in like this area here and everybody's telling me I'm crazy. This is a fractal though, this sharp V bottom here. We can see that. Let me pull up a chart real quick just to show you one that I see in the chart that looks exactly like that. It's Recaf, if you want to know. So Recaf has that V in it. So does the Baltic Dry Index. That's the V right there. And then you go into this dead period, and then eventually it'll hit it. It'll hit it going to the upside. There's that V shape. So when we're looking at these V shapes, these little V's, yeah, we can see that. That's the bounce here. There's that V there. And then we're going to create another V any second where we just go and then take off. So I just wanted to show you that since we had that up there. We had nat gas over $7 is such a big number. It really is. It's way up there. And this is usually the time where natural gas actually cools down for price wise, because we're in between a heating season and a cooling season. And we're not cooling down. We're actually going vertical. So I don't even want to know where this ends up. Q3, Q4 of this year. I think we got a long way to go to the upside. And I really don't. I'm not looking forward to paying the heating bills, guys. I really do not want to pay those this next winter coming up. When you make more profit commodity trading than actually selling cars. Volkswagen had a huge hedging position on nickel, which resulted in a huge profit. Volkswagen reaps unexpected 3.8 billion windfall on nickel price spike. That's pretty crazy. This is the United States ended the winter with the least natural gas and storage in 3 years. So here it is. That's lower than the past couple of years. We've got 2019 where it was pretty low, and I think we've done a breakout here to the downside where we could really draw this down. in the short term here. So we're going to see probably higher prices as inventories get eaten up. And remember, pricing goes up when inventories go down, when they get tight. So when this builds back up, we're supposed to be building here. This is kind of where we stop and we start building, but we're not seeing any builds. I mean, we'll probably build some, but it's getting down there. It is getting down there. Here's one, natural gas. If you think that your gas price is high now, wait until November, December. I completely agree. What we've got is this big long-term downtrend where we squeezed up, we broke to the upside, did a little, retest, back test to this guy here, and now we're taking off to the upside. You can see that nice big cylinder pattern. The cylinder pattern we've seen in a whole bunch of different stocks. We've seen it in lithium stocks. We've seen it in uranium stocks, and natural gas looks like it's ready to light it up in the United States. Now, natural gas was my number one pick of a commodity that could go up, and uranium and natural gas for leverage to commodity moves. And also, it was my number one pick for what I thought was going to be the largest move this year between uranium and natural gas. And it doesn't matter which one does it, as long as they both go way up. Those are my top picks. Why was natural gas my top pick? Because Europe and Asia has massively high natural gas prices, and it's only going to drag us upward. It's going to pull us upward, and we're going to try to do LNG. And looking at LNG, it says mind the gap. LNG demand expected to outstrip supply as world shifts away from Russia. And I've shown this once before, the demand post-Ukraine scenario, and it just gaps. I don't know how this is going to get filled. I mean, they can make up all this stuff. We don't have the tankers out there for LNG. That we're going to get in a huge squeeze for even dry bulk shipping and the tankers that do LNG. I'm going to go all the way to the top here. We have regional natural gas prices. This is your LNG import facility. They were canceling pipelines all through here. And now New England pricing's $30 a million cubic feet versus Marcellus and other shales at less than $4. So this is the pricing. I'm over here in Colorado, more towards the cheap side. We've got natural gas trading at almost 7 times multiple from the 2020 lows. European countries might have big financial crisis with such heavy inflation. Beyond 840, it's negative shock for world emerging markets where gas consumption in higher manner. That's pretty crazy. And U.S. natural gas prices spikes to highest since January short squeeze. Futures up 90% so far this year after highest close since 2008. Inventories already 17% below 5-year seasonal average. Yeah, and then we went over the LNG demand. Looking at the natural gas chart, just to kind of look at this guy here. It should be up here. Okay, we're almost there. Here we go. This is the natural gas chart. Obviously, this thing's been on the roids. We're talking Mark McGuire style, Sammy Sosa, but this is the breakout here. We've got the breakout of the trend. We did a retest, and now we're rocketing higher for natural gas. And I think where we are in the world, we're going somewhere up there. We got to at least go to these highs. I think we're going to break that and go even higher. So, I'm not looking forward to paying these heating bills next year and the year after. But who is? But that's what I've got there, guys. There's a bunch of ways that you can play natural gas. I have it on my website, Finding Value Finance. I've got a bunch of natural gas and oil producers. I think they are some of the best plays. Period. Why? Risk-adjusted returns. These guys are cash cows. This is going to make them even bigger cash cows. And if you want to know my opinion on it, check the link below. Finding Value Finance. The Platinum membership will gain you access to all of the companies that I think will do well in this scenario. Some of them have already taken off. And what I'm doing is I've purchased them and I'm just holding on. I'm not selling anything. There's no reason for me to sell these. What else am I going to go into that's going to have this symmetry like this? The risk-adjusted returns. I mean, these guys are cash cows. I went in when they were all big debt. Everyone thought they're going to go bankrupt. Now they're going to be spewing cash everywhere. Some still have hedges in place. Majority do. A hedge is they hedge their production forward so they wouldn't go bankrupt. Now those hedges are losses, but they're going to start rolling off, and they're going to make even more money, even bigger cash cows. So not only are they going to be cash cows today, they're going to be even bigger cash cows in the future. And from a risk perspective, I think they're really good. Oil, natural gas, they're going to go crazy. Now, uranium's a little bit more speculative because a lot of the companies aren't making money. These are cash cows. Risk adjusted, these are probably better bets. And that's where I put the majority of my money at the bottom. Now, I still have a lot of uranium, don't get me wrong. But if you guys are interested in figuring out what I own, how I'm playing this, and the setup here, obviously you know the setup. We just went over it. Platinum membership, grab it. It's $50 a month, and it will repeat over and over and over. Or you can do a year-long one. It's up to you. And you'll see what I own for this big bull market. This is probably going to be the biggest bull market in the majority of these commodities that I've ever seen. Granted, I only saw the last one, but this is a big boy move. So give me a thumbs up, subscribe to the channel, subscribe to the website. We'll catch you later. This is Finding Value.